Imagine being able to buy Solana with just one click, right inside your normal brokerage account. No setting up wallets, no worrying about private keys, just a simple regulated stock ticker. Well, as of October 24th, 2025, that's no longer just an idea. Regulators in Hong Kong just gave the green light to the world's very first Solana spot ETF, and it's set to go live on October 27th.
This move immediately sparks the huge question we're going to dig into today. If Hong Kong is the first one to make this happen, is the US going to be next? And maybe more importantly, what could this really mean for Solana's price, for how easy it is to access, and for you, the investor?
All right, here's our game plan. First, we're going to unpack why Hong Kong's approval is such a landmark event. Then we'll pop the hood on the new ETF itself and see what it's all about. We'll explore the strategy behind why Hong Kong moves so fast, analyze how these products can totally change the game for an asset, and finally, we'll turn our attention to the US to see what the road ahead looks like there before we wrap up with a handy checklist for any potential investor.
So why does an ETF matter so much anyway? Well, the most crucial part is this. ETFs unlock regulated capital. They act like a bridge, letting traditional money flow into what can be a pretty complex new asset class. And we've seen this exact playbook before, right? It happened with Bitcoin, and it happened with Ether.
Exactly. When those ETFs launched, they basically created a super simple on-ramp for a whole new crowd of investors. And that easier access, it led to bigger flows of capital, and all that new buying and selling helped the market figure out a clearer, more stable price. Now, Solana is getting that same treatment, starting in Hong Kong.
And look, staying on top of this fast-moving space means having the best info. Smart investing starts with better information, so if you're getting value out of this breakdown, make sure you subscribe to Smart Money.
Okay, let's get into the specifics. What exactly is this new product that's just launched in Hong Kong? Let's take a look at the details.
Okay, looking at the spec sheet here, a few things really jump out. The issuer, ChinaAmc, is a major, well-established firm which adds a lot of credibility right off the bat. Now, this is really important. It's a spot ETF. That means the fund physically buys and holds actual Solana tokens, not just derivatives based on its price. It's also super accessible, trading in Hong Kong dollars, Chinese renminbi, and US dollars. Now, the fees are definitely something to keep an eye on, with the total expense ratio, or TER, estimated around 1.99%. And that TER is basically the total annual cost to own a piece of the fund.
So, what does this all boil down to in the real world? It's actually pretty simple. A traditional investor in Hong Kong can now buy and sell Solana through their regular broker during normal market hours, just like they would with any other stock. No managing private keys, no dealing with crypto exchanges. It's Solana, but simplified.
So that leads to the big question. Why Hong Kong? Why did they beat everyone else to the punch on this? Well, it wasn't an accident. It all comes down to a very clear, very strategic play on their part. You see, Hong Kong has been methodically building out its rulebook for virtual assets for a while now. They've already approved Bitcoin and Ether spot ETFs, so all the regulatory plumbing was already in place. And this is all part of a much bigger ambition, to cement Hong Kong's status as a top-tier, competitive, global financial hub that successfully connects the old world of traditional finance with the new world of crypto.
Okay, let's zoom out for a minute. What really happens when an asset like Solana gets wrapped up in an ETF? Well, there are three big potential effects that we should all be watching. First, you get new liquidity access. All of a sudden, institutions, retirement accounts, and massive wealth management platforms can get exposure with just a simple ticker. Second, you see an impact on price discovery. All that new demand gets concentrated during stock market hours, which can really influence the asset's price around the world. And third, this attracts entirely new kinds of buyers. Think of wealth managers who couldn't touch tokens directly before, but are perfectly comfortable with the ETF structure. But, and I need to be crystal clear on this point, an ETF simplifies access. It does not guarantee a price jump. Think of it as a new, much wider on-ramp to the highway. It doesn't control the speed of traffic. The ultimate performance of Solana still comes down to the health of its ecosystem, how much it's actually being used, and of course, what's happening in the broader economy. And that brings us right back to our main question. With Hong Kong making its move, where exactly does the United States stand? Well, to answer that, you have to look at the rulebook. This timeline is key because the landscape in the US just changed in a really big way. Just last month, in September 2025, the SEC adopted what are called generic listing standards for spot crypto ETFs. This is a huge development. It creates a standardized, much clearer pathway for these products to come to market.
So while Hong Kong got there first, the US just laid down the welcome mat for firms to start submitting their own applications under these new, clearer rules.
And what does that new pathway mean in the real world? It means speed. The potential approval timeline could shrink dramatically. Instead of a long, drawn-out fight that could take months and months, a product that fits the new criteria could potentially get approved in roughly 75 days.
So, the bottom line for the US is this. There is now a policy tailwind. The door is more open than it has ever been for a product like a Solana ETF. But, and it's a big but, whether one actually launches still depends on who files an application, if the market plumbing is ready, and, you guessed it, politics.
So, with all this news, it's pretty easy to get caught up in the excitement. But before anyone considers investing in a product like this, it is absolutely critical to run through a practical checklist.
First, dig into the fees. You have to compare the total cost of owning the ETF versus just buying Solana directly. Second, look at tracking and liquidity. How closely does the ETF's price actually follow the real-time price of Solana? And what's the gap between the buy and sell price? The spread. Smaller is better. Third, remember the hours. The ETF only trades when the Hong Kong exchange is open, but Solana trades 24/7. Gaps can happen overnight. Fourth, know your taxes. The rules are different everywhere. And finally, never, ever forget the risks. Risks from the issuer, the custodian, and of course, the volatility of the crypto asset itself.
You know, it also helps to think about who this is really for. If you're already comfortable in the crypto world, managing your own keys, using wallets, all that stuff, then an ETF is mainly about convenience. But if you're an investor who sticks to traditional brokerage accounts, this ETF isn't just a convenience, it's a brand new bridge. For many, it could be the very first and simplest way to get exposure to Solana.
So let's wrap it all up. The key takeaway is this. Hong Kong has officially fired the starting gun, providing a simple, regulated ticker for institutional and traditional investors to access Solana. And at the exact same time, the US has finally put the rules in place that could make a similar launch happen much, much faster. The race is officially on.
And as always, please remember this explainer is for educational purposes only and is not financial advice. You should always do your own research before making any investment decisions.